Hey, good morning, everybody. It's Friday, May 8th, 2026. TGIF, baby. I'm tired. Still not sleeping all that great after the knee surgery. So, especially around early morning hours, I tend to be up. So by now, I'm always pretty damn tired. I gotta do something about that. Anyway, I'm rambling. Thank you for joining me. Remember, my name is Hammer. I am the founder of Hammer Solutions, home of great products such as Originator, Success, Grab and Go Social, and Rate Sensei. And our products are for helping mortgage folks get found online, get loans from Google and social media, AI search. We've got wicked stuff. Go check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, where I broadcast to you on Facebook and YouTube. Talk about what's going on in the world, what we've got going on with rates and pricing. This morning, we've got some, just the normal Iran overseas headlines. We've got jobs data to talk about, and then we'll talk about what we got going on for next week. Remember, if you don't want to miss a moment of the show, make sure you sign up to get our text reminder that I'm going live with the links. Makes it nice and easy peasy cheesy. Check it out, hmmr.io/reminder, or use this cool QR code over here to go ahead and sign up for those. Also, you can sign up for our daily lock advice, www.ratelockedvice.com, and our text alerts at www.ratetextalerts.com. So be sure to check those out. If you're here this morning, say good morning. If you're watching on the replay, do me a favor. Give me a hashtag replay in the comments. Let me know that you were here. Don't forget to smash that like button, subscribe, and all that good stuff. And again, your comments are what fuel the engagement. So be sure to say hello. And when I ask some questions, make sure you answer. I know that a lot of you like to just watch, but your answers keep me going as well. So let's welcome the live folks, and then we'll go ahead and jump into the good stuff. Ron Siegel says today is National Coconut Cream Pie Day. We also almost celebrate National Military Spouse Appreciation Day. That should be every day, Ron Siegel, and I know you'll agree with me. If you are a military spouse or significant other, congratulations. But let's celebrate National Coconut Cream Pie Day. I wish I had me a piece to go ahead and get going. Sean Segaloff, he likes his with a little bit of bacon sprinkled on the top. You can see the kitties today. They are active and busy in the background. Good morning, Nicole Semerad, Deb Dickinson, Tom Dedmore, Mike Tebow, Holly Johnson, Vicky McSweeney, Chris Dickerson, Rob Wilson. Great to have all of you here. Thank you for joining me. Let's go ahead and let's get started. We will take a look at the technicals, talk about what happened with the jobs data. Let's go from there. We'll go ahead and let's zoom in a little bit. So let's start off with a quick recap of what happened yesterday. Yesterday is everything. You see everything that happened in front of this line here, everything to the left of this line. This is everything that happened yesterday. Generally, pricing came out right around here, right around 10 a.m. Eastern time. And when we see this line go down, that is bad for your rate sheets. When we see it go up, that is good for your rate sheets. And as you can tell, it went down and down and down and down. Generally, we had a lot of reprices worse through the late morning, early afternoon into the kind of mid-afternoon as things hit their worst levels. Our text alerts, we did send out a text that you wanted to go ahead and lock in. We sent that out here. I don't know why I just doubled up on this one, but anyway, we did send out an alert. You'll notice it hit my phone at 11:36 a.m. Bonds losing ground on peace deal problems headlines. Lenders may reprice worse, especially if losses continue, and they did. We went from 12 basis points in the morning to -3 basis points in the alert to -18 basis points by the end of the day. And our, kind of finish line here, bonds sold off through the day after optimism about a peace deal with Iran started to fade on some newswire headlines and maybe some positioning for tomorrow's BLS jobs data as well. And I'll show you something. This is a little prophetic. All right. So what I said yesterday is I said that there was probably, the reason we were seeing this sell-off that we were seeing right here. Hold on, I'll go back to this one. The reason we were seeing this sell-off here through the afternoon and into the morning is getting ready for the jobs data this morning. And then when we got the jobs data this morning, it was right here. Let's switch to yellow. It was right here, and you could see that bonds improved. And when things improve, we're going to use green, and that we've actually improved quite a bit on the morning. We're currently up 22 basis points on the day, up 22 basis points on the day. That's going to help pricing a little bit this morning. So getting back here, rate sheets today are definitely better. And surprisingly, looking at Mortgage News Daily and using this as a reference point, yesterday, even after the majority of reprices worse, it kind of showed pricing about the same as the day before, even though when we look at the 5-day chart here and we take a look and see where we ended the day and where we ended the day, it's certainly a lot worse. And I would figure that we would have seen worse. But according to Mortgage News Daily, it wasn't really that much worse. It'll be a little bit better today. You can see that we still continue. Let me bring up this chart here. We still continue to be below the March 27th worst levels that we saw a while back. That was right here, right? March 27th, our worst, highest pricing. We were testing that, we were kind of pushing up closer to that, but now we've fallen back down and we're kind of back down. Hopefully we'll get back down into this range. What would it take to get back down into that range? We need to see something happen with the Strait of Hormuz and something open. So bonds are recovering this morning despite strong jobs data. Jobs data came in better than expected. U.S. employers added to the payroll. They were looking anywhere from, I would see numbers from 55 to 65,000. Bloomberg survey called for a 65,000 increase, came in 115,000. Normally, when we see this happen, this is not good for bonds. Normally, when we have more jobs created, that would be considered strong. What you'll notice is there's a lot less of a reaction to that right now, though, because of the current condition of the labor market and the participation rate and the number of people. What's basically holding things together is right here is unemployment being unchanged at 4.3%. Unemployment is taking a bit more of a lead than the non-farm payroll creation, job creation. And I said yesterday that I wasn't really worried, even if we did have some higher numbers and we saw a negative reaction, it wouldn't have lasted that long. It's a day or two, but you can definitely see the reaction that we saw is basically too positive. I mean, here we are at 8:30 when the data came out, and we have a very positive reaction. We normally would not see a positive reaction, but a lot of that has to do with the fact that nobody is expecting the Fed to cut rates anyway. Not in June, not in July, not in September. Now, what's funny here is check this out too, right? So when we, shit, these aren't showing you the right thing. All right, hold on a minute, let me do this. Boop. Okay, so when we look at these numbers, look at this. This is September, right? Markets believe that we have an 85% chance that we will stay exactly where we're at now, and about a 15% chance that we could see a rate cut. On this side is a rate cut. It would make the rate lower. But then as we get through towards the end of the year, all of a sudden, here we are. We've got a 75% chance of staying the same. But then they split it. We could have about a 10% chance or 11% chance that we're going to get higher and an 11% chance that we're going to get lower. Basically, markets are like, we have no idea what the heck is actually going to happen. The Fed outlook, markets can't seem to get a handle on whether they think it's going to happen. The reality is there's no reason for the Fed to even need to remotely consider cutting rates. The Fed's mandate is to maintain price stability as well as to maximize employment. So unemployment's 4.3%. It's where, it's where it was last month. It's where it is this month. We're seeing, an economy that is holding its own. We've got risk of inflation. Although, did you see, I'm sure it's probably somewhere here in the Wall Street Journal. I read it last night. So let me see if I can find the more relevant article. But the latest round of Trump's tariffs were found to be by the what was it? Which court was it? I'm sorry. This is where the lack of sleep, you can tell. Here, let me look at tariffs and we'll see what comes up if I use the search. Where's the search here? Search. Let's look for tariffs. That would help if I spelled tariff right. Yeah, so the trade court rules Trump tariffs, rules against Trump tariffs. I don't want the minute briefing. I want the whole article. Podcast. All right. Yeah, it's on the podcast, but so they turned around and said his latest round of tariffs aren't any good. Mike Thibault says he saw an article yesterday that Warsh is leaning towards quantitative easing instead of a Fed rate cut. I gotta say, that's stupid. Not that not that you're stupid, Mike. Of course you know that. But why would we do quantitative easing in this condition? It would drive it just I can't imagine that that's actually anything. And I don't think that he gets to make that choice. I think that would have to be done by committee, and nobody else is going to go for that. Right now, the reality is that even though the money is borrowed, and let's face it, people are spending money they don't have. They're going deeper and deeper in debt. We know that it's a farce. It's a lie. People are not making enough money to be spending this money, but the wealthy are, because as stocks continue to just hit highs and do goofy things, and AI stocks, and it's like a tech bubble again. So wealthy people have plenty of money to spend, and they're definitely propping up certain parts of the economy. And then the average folk, they're buying things like $4.50 gas. They have to. They need it. And they're using credit cards, and they're going to refinance, and they're going to get rid of their 2.5% interest rates and take 7% interest rates for cash out refis for debt consolidation, and you can't feel guilty for being the one to help them with that. This is just the economic condition that many people are going to be in, and hopefully you can give them enough cash flow reprieve that things can settle down. But I find that one to be a bit weird. Ron also pointed out that a lot of those numbers, a lot of new part-time jobs. Again, people are trying to make ends meet. You have a lot of companies, corporations. I feel like corporations are the scumbags of America. They will undercut hours so they don't have to provide medical benefits, and they will undercut hours so they don't have to provide other full-time benefits to their employees. And you have people that are doing the gig economy, as well as taking conventional part-time jobs. By the way, when my wife was gone the other day, I was tired again, recovering and not feeling well. I DoorDashed. Now, remember, you guys know where I live. I live in the middle of the woods on a mountain, and I'm about 20 minutes from I'm about 20 minutes from town. So, I know it, like, this is where I live, but I can DoorDash. And I bought a $20, sub from Firehouse Subs, and I tipped the driver $20 because by DoorDashing, they were going to make a portion of the $5 service fee. Gas is $4 and change a gallon. How are they going to make any money driving to get my sandwich, driving 20 minutes up here to give me my sandwich, probably driving 20 minutes back to town before they could take the next order? So you're talking, like, how could anybody make any money door dashing unless you have generous tipping? So I gave them $20, but even that's not really, let's call it an hour's worth of work plus gas plus wear and tear on their vehicle. That's not a great living. Certainly not a great living. So yeah, it's kind of crazy. No, buying MBS is quantitative easing. No, you've got quantitative easing and quantitative tightening. So I know what you meant, Mike. You were right. Quantitative easing is to buy more mortgage-backed securities, to buy 10-year treasuries. But just filling up the Fed's balance sheet, it doesn't solve any problems, and certainly is a thing. Ron said it's all about a weak jobs market. Frazier, Frazier blessing us with his presence today, pointing out my grumpiness. Good morning, sir. Ron said it's all about weak jobs market. Pay more attention to U6 at 8% versus U3 at 4.3%. The unemployment, what is U6 versus U3? I know you're talking about unemployment rate, but I don't know what U6 versus U3 is. I'll have to Google that. I'm ignorant on that one. I have to scream ignorance. defend myself as being a redneck. So anyway, let's wrap this thing up. It is Friday. You guys don't want to be on here. We've already been on for 15 minutes. When we get on here, the rate outlook cautiously float for now. We're seeing things kind of holding steady. Reprice risk on the day is moderate. Next week, we're going to have some inflation data, but we'll see. It's really, we're hoping to see where things go with this. It's kind of crazy. If you look at Bloomberg, and you look at like a lot of the headlines, Iran, we're still having these little skirmishes now, although we technically haven't broken the ceasefire, but yet, Iran is coming after the big boats. We're going after their little boats. They came out with missiles and drones, so we attacked where they came from with the missiles and drones. All of this is a little bit scary, but yet nobody wants to, everybody still wants to end this thing. And I don't want to get into political commentary, but I don't know. Does anybody, and again, you guys, let's go into this and talk about it eyes wide open, but can anybody, and Ron, I know that you're really good at kind of being objective and pointing things out. Can anyone say that Trump looks good on this, other than the only argument that we even remotely have is that you would have to believe that Iran was close to having nuclear weapons, very close. It's the only thing that would defend where we're at. As an American, I thought we were supposed to go in and just crush these folks, and the different things. And it looks like they are a lot more resilient than expected. They have a lot more control than expected, shutting down the Strait of Hormuz, and everything that Trump can post his blubbering tweets about how we're going to blow things up and we're going to do this and we're going to do that. But at the end of the day, we look kind of weak, and to the world, we look kind of weak. We got a couple of ships through, but then it escalated things under Trump's not Operation Freedom. What did he call it? I always forget. Well, but the temporary freedom project there about getting some boats through. But then, it's paused again. So I don't know. I think we look. Yeah, Sean said, wasn't the war over 2 months ago? This whole thing it feels like a real big failure. It really does. Trump comments are becoming irrelevant since he vacillates and embellishes so much. Yeah. And that's kind of what I agree too. And the markets are having a hard time with that. So that's what we have to remember is they're looking for, and the other side is just as bad. I'm not just picking on Trump. I mean, the whack jobs that are over in Iran, and I don't care if I hurt anybody's feelings on that one. They're whack jobs. They are nuts. And they are egotist, religious zealot freaks. And they, when you listen to them, it's like the both sides. It's just ludicrous. Just ludicrous. Project Freedom. Thank you. Project Freedom, which is currently project on hold because it escalated things is what it did. And they recognize that. And you could tell that Trump is walking a line. He can talk a good game, but he does not want to continue the bombing. As many of you pointed out, we're getting too close to the midterms. And we need to get this thing wrapped up. We need to give time for gas prices to come back down. And that's why when we look at lock and float stuff, that's really where everything's going to be. Longer term, the question is, when will this actually start to wrap up? When will the Strait of Hormuz open? When it does, we'll see rates drop another quarter point. But that'll be about it for a while. And as far as Fed rate cuts, they don't need to. Hopefully inflation stays in check. I'd like to find out a little bit more about the tariffs because the latest round, so let's see, trade court tariffs ruling. Yeah, so the trade court rules Trump's replacement tariffs illegal. So not the first round, but the second round. It's so that's a thing, it's just so complicated. So much. And thanks, Sean, pointing out the got to wrap it up soon. So it's time for Cuba before the midterms. Yeah. Most of the Iranian people feel like the regime is, and we didn't do anything. We didn't get rid of the regime. What is it? We're going to have assurances that they're not going to work with nuclear, that they're not going to enrich uranium. Is this this will be the big win? We've gotten their word. They're not going to do it. We had that a few years ago from Obama before he messed it up. I don't know. Anyway, that's enough. It's getting down that we're going down that slide. So I'll see you guys on Monday. I'm probably going to change the show up a little bit because I want to, and we'll talk then. So, all right, my friends, have a fantastic Friday. Have a great weekend, and I'll see you on Monday. Bye-bye.